Hello, everyone. So today I have the pleasure of having Ricardo Mercardo from Allstate Insurance. Today we're going to talk about insurance. How you doing, Ricardo?
Hi guys, how are you? Nice to meet you. Thanks for
Uh,
having me, Raf.
Of course, of course. And by the way, él habla español también, right? You speak Spanish?
Lógico, sí, estamos aquí dos amistades latinas y saludos a toda mi gente también ahí latina
Okay.
que está escuchando.
So what we're going to do is basically, and obviously we're going to talk about insurance as it relates to real estate, right? And there's two aspects, right? One aspect is if you're buying a home and you're thinking of getting insurance, right? But the other aspect is that you may own a home already, and what are some of the things that you should look for? So let's start off. If somebody's buying brand new, what's the process for them getting insurance?
So essentially, it's going to fall in line with all of the home buying process. So once you've got an offer on a house that's accepted, you're now presenting that to the mortgage company, and they're looking to approve your loan. Before they're going to issue a final commitment to you and give you a clear to close, they're going to be looking for an insurance policy, right? And because all these loans are including homeowners insurance, they're going to have that with some degree of time ahead of that final clear to close, because they're going to punch that in for the final number, which is going to be your now 30-year, hopefully fixed mortgage payment. And they're going to put that in the escrows, right? So typically the banks are going to want you to pay that first year up front because they're going to now start that escrow month by month by month by month. They're going to start collecting that money, and then they'll have enough to pay next year's renewal. But up front, they want that policy paid. They don't want any instances of problems to happen during this first year of the house, and it turns out the insurance isn't paid. And now, God forbid, the house burns down and there's no insurance policy. So they're going to want a policy paid, and they're going to want the binder to be sent with them, and they want the bank's name there as well. People need to know that they want the bank's name, PO box, loan number, also listed on the policy as an additional insured, secondary insured, obviously, to the primary resident.
Okay, so pretty much there is no choice. I mean, if you're buying a house and you're getting a mortgage, I mean, you have to get insurance, correct?
It's a requirement. It's
It's a
definitely going to
requirement.
make you have that.
Okay.
And if for any reason, people don't know this often, but if for some reason you lose your policy or don't have a policy and the bank becomes aware of it, they can put a forced place policy on the house. And they call it forced place because you didn't get one. So now we're going to force you because you have to have it. And many times those policies are 2 or 3 times the price of a normal policy. And they say so in writing. A forced place is more expensive than what you may be able to get out in the marketplace. So it's something that you need to have.
Okay, and what about if you're buying the house all cash?
If you're buying the house all cash, essentially you can self-insure. There's no, financial lender involved that's requiring you to have that insurance. There's no law that requires you to have homeowners insurance. So if that house is owned free and clear, you can have the house with no insurance on it. I don't recommend it because you just finished putting $500,000 into a house and it burns down tomorrow. Unless you got another 500,000 that you don't mind, even if you did have it, you don't mind dropping another 500,000 to fix the house. Then if you're that guy or girl, hey, go ahead, right? But for most people, it makes all the sense in the world to have a policy, whether or not the house is paid in full or not, because again, the policy is going to cost you a fraction of what the outlay would be to actually have to build that house back.
Okay. Now, what are some of the things within that insurance policy that are very important? Like, can you go over that? Like when we take out an insurance policy, what are we paying for exactly?
So insurance policy has mainly 5 components to it. The first would be the dwelling, obviously the main structure of the house. What's the dollar amount that they've put for the rebuilding of that residence? That's the first. You should be looking to make sure that that number is going to be enough, sufficiently high to cover the rebuilding of that property, right? And so, depending on the area, that number it's a multiple, right? The square footage times a multiple, and that multiple is going to vary. I mean, in New York, it's a lot higher than in other states, right? So you're going to be looking to create a reconstruction value for that home and that's the primary number there. So you look to make sure that that number is going to be sufficiently high to cover any rebuilding of that house, and it's going to be more than it would cost to rebuild a house with a blank slate, right? Because you now have to include demolition. You're going to have to include other costs that would not normally be involved in a new build. So it's going to be more than what you would need to build a house new again. Because you have, like I said, you got other costs included, demolition and other soft costs, etc., for an existing house. Second to that would then be the next line would be other structures, which would include, a garage, a detached garage, a gazebo, a shed, a deck, things that are not attached to the house, right? If it's attached to the house, then it's part of that first number, the dwelling number. Second to that would then be your contents, which includes bedroom furniture, clothing, silverware, everything you move into the house with. So you're looking at that number as well. Following that, after contents would be liability coverage, loss of use. So loss of use is when I have to vacate the home, I still have to pay that mortgage, right? So now the insurance policy would compensate me for not having to pay rent somewhere in the interim that the home is being repaired, right? Following that would be liability. That's your slip and fall. That's an altercation at the residence, a fight, somebody slipping and falling and getting hurt, any one of those kind of liability issues that happen in and around the house. And then you have medical payments, which is a good faith payment to someone who is a guest. A guest could even be your mom, but it couldn't be someone that lives there. So if your mom lives with you, she's not considered a guest. But if mom lives somewhere else and she visits and she gets hurt, you could actually get up to $5,000 in medical coverage refunded for medical bills for her or any of the guests, as I said, and it would be covered by the homeowner's policy. Those are the typical things that are covered. You're also going to want to make sure that that the home is an admitted policy. I mean that the policy is admitted. The company is admitted. Because there are non-admitted and then there are admitted companies that are in this marketplace. Usually you're going to want or that to be an admitted company. You want it to cover certain things, and you want to know that the house is going to have a comprehensive list of things that it's covered for. So you're usually going to want that to be an HO3 policy. And I like to add a couple of things to an HO3. I like to add water and sewer. A lot of people lately are adding, the buried lines, the service lines to the house. They can be attacked by roots, something that's covered by your homeowner's policy. The water and sewer backup is becoming a more often thing that's needed. These New York City sewers are old. Even in the exterior areas of the New York area, people have sewers backing up into the house for a variety of reasons. Homeowners policy doesn't cover that stuff. So those are typically the things that I usually want to add and look out for. Enough coverage on the house. The liability number should be a good number. I've seen some people have a really low number on liability. I don't recommend any less than 300,000 on that. But yeah, I mean, if I had to say what we're looking for, that it'll be an HO3, an admitted policy, sufficient coverage for the house, and then the price is obviously an important thing, but you need to look for that stuff first. And so price can sometimes be a questionable thing, because you might have a really expensive policy that doesn't have a lot of coverage, right? Whereas you might have another one that's less money, but really covers a lot. So it's something you gotta look at all that.
Now, if I currently own a home, correct, and I'm looking at my insurance document or my insurance file, and I'm curious to know, okay, what should I look at? I know you mentioned a few things, but maybe I may want like lower price or whatever it is. What are some things that I should consider? Like, what are the things I should be looking at when I look at my insurance policy?
So a lot of these companies, because they're written in such a way that they are guaranteeing to build this house back over the course of a number of years, they have built in 4, 5, 6% increases built in year over year. And over the course of time, the dwelling number can get out of whack. It can get much higher than you need it to be, right? And so you can actually talk to your current insurance person and have them do a policy review to make sure that you're not overinsured. Because let's make no bones about this. I mean, the insurance companies, if you're paying for extra coverage, they're only going to pay what the law requires. They're only going to pay to rebuild that house to where it was, right? Insurance is meant to bring you back to where you were before the loss. They're not going to pay extra money for you to make a new modern miracle of a home for yourself, they're going to build back what is, right? And so it's something you ought to just take a second to look at. Again, we touched on some of the coverages that you ought to see as being there, right? And then, that's one of the places that I look to, is to make sure that, we're going to trim the fat and make sure there's not extra, because you are paying for extra, right? Some people do need higher limits, and some don't. And so the answer to the question is going to look different for everybody. For some people, they're going to be underinsured. Some people are going to be overinsured. And so you've got to kind of have that conversation with a professional.
Okay. Well, Ricardo, thank you so much for this information. If they
All right.
wanted to speak with you regarding insurance, how do they reach out to you?
Phone, the office telephone, 516-385-5900. My email is like my name. So it's rmercado@allstate.com.
Thanks a lot, Ricardo. Enjoy, man. Good seeing you again, and we'll be in touch. Okay.
All right, bro. Bye.